Okay, good afternoon, everybody. I guess I'm doing the meeting. Sorry for the delay. I just had to set all the YouTube stuff up, but I think we're good on YouTube. Just double check. Set all the YouTube stuff. Yep, looks like we're good. Okay. Here is the disclosure, which I will now do. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I have a new long. The new long is Bed Bath & Beyond. It's so small that I wish I didn't even have to mention it here, because it's so small, and I'm just getting started with it, and it's kind of like a cash flow thing. I can explain a little bit. It's so small, I wish I didn't have to mention it, but I have to mention it. So yeah, that's that. Let's do it. Okay, so markets had a volatile day for sure, and ended up closing on lows. If you look at this candle, it looks like we basically opened up, traded a little bit higher, and then traded down all day and closed on lows, but that's definitely not what happened. It was a busy day. We opened, traded higher a little bit, looked like we were, so let me take a half step back actually. We came into the morning with short-term sentiment giving us a buy signal after the close yesterday, but futures were gapping up overnight, which that definitely happens more often than we would like it to. Basically sentiment sets up for a bounce back, and then the market bounces back overnight. And it's not that the market can't bounce back further, because usually when you get that, you're thinking it's the same idea that you're thinking when the market's extended, that you're going to get some type of correction to equilibrium, either through price or time. Ideally, when markets get extended, you get like a short squeeze snapback. So daily ADMA maybe a little under like 460, a bit of a target for that snapback. And so when the market gaps up, the problem is just the entry, because where are you risking it to? And if you're risking to pre-market lows, sometimes that can be multiple dollars away. So it makes the risk reward a little bit trickier. But so again, coming into the day, we definitely were leaning on the side of being long despite the gap up. But maybe just, using a little bit of patience, again, because of the gap up. So we opened, traded a little higher, ended up filling the gap, and then, guys were definitely starting to look for longs around here again, and we staged a pretty solid bounce. And I definitely thought this was it here, where we traded below yesterday's low, and then had one of these kind of like lame bottoms where it's not really capitulatory, they just can't really break it down. And, again, that's one of the ways. There's basically two ways to market bottoms. We either capitulate and flush out and get extended, or we kind of base out and, sellers can't. It's like a battle between sellers and buyers, and eventually the buyers win. And I definitely thought this was pretty much it here, again, just based on where sentiment is. But we ended up rolling over pretty heavily, and that's with bonds trading higher except into the close. So rates pretty much trading lower, bonds trading higher all day. So you definitely can't blame the bond market today for this move. I don't really know what you can blame other than more sellers than buyers in the marketplace today. But I'm excited for it. So going back to what we had said before, coming into today, short-term sentiment is giving us a buy. Those medium-term sentiment indicators are not quite at a buy, but they're getting really close. And so obviously this is going to help that. So I'm excited to see what comes out tonight from sentiment, both short-term and even medium-term. Because again, we always say, extension always corrects, but things that are oversold, overbought, they can become more oversold. Extension can become further extension. And that's what we're seeing today. Markets, after the big gap down, weekday close on lows yesterday, markets were oversold arguably, markets were extended arguably, and now today they're more oversold and they're more overextended, like we say can happen. So it just gives us more room to snap back, in my opinion. Like, that's why it's exciting to me. If your target's the ADMA, if you're looking for a snapback from 455 to 460, that's 5 points. But now we're talking, we might be buying 450 or under 450 tomorrow. And now you're talking like a 10-point snapback, which can definitely happen. Again, typically the best snapbacks are in bear markets. It would not be unrealistic for SPY to snap back 10 points in a day. So again, we'll see where those sentiment stuff is tonight, but I assume it's going to be in the Bulls' favor. And then we'll see what the futures do overnight. Hopefully they can give us some further weakness, some further flushing tomorrow. Gapping up. If SPY just gaps up to 455 tomorrow, that would be the most annoying thing. So let's hope that doesn't happen. Trying to think of what else really today. I don't know. I traded random stuff today. Did I trade the VIX today? I don't think I did. I traded kind of random stuff today. I traded a little bit of SoFi because I was trading on that news. What else did I trade? Oh, I traded Labu. Labu is another one that definitely a lot of eyeballs are looking at this thing for a bounce, and biotechs are trading like they're going bankrupt, which obviously they're not, but it is a speculative field. So I guess the weakness makes sense, but this is just such a crazy, harsh move. I mentioned 94 as being a level, and this was similar to the market today. It looked like it was going to be strong. I was trading Labu pretty early on, and it looked like XBI was trying to be strong. Ended up rolling over, and then again didn't quite break yesterday's low. Basically tested yesterday's low. Came all the way back, made new highs on the day. You would think for sure 8 out of 10, 9 out of 10 times that this is good to go. But instead just completely rolled over again. So this is definitely one to watch, Labu, via XBI. And what else? Yeah, I don't know. I mean, there wasn't too much on our plate coming into today because of the open, so the open was tricky, and then I feel like today's action was kind of just take what you can get with the action. The flow definitely wasn't great. If anything, it was bearish. And we closed on lows. 200-day right here. Everyone's looking at the 200 for the Qs. But again, it's just a line. We could easily flush it and then come back up through it. So we'll see where we open tomorrow. And then looks like, 360 is definitely like a major level for the Qs. 360. But so yeah, that's all I really have to talk about. I guess if anyone wants me to talk about Bed Bath & Beyond, I've been stalking. We know a lot about this name through our fundamental guru in the ProDesk VTF. So if you're not in the ProDesk VTF, you got to get in there. I like how, you guys know the story probably, so I don't really need to explain too much of it, but the short float is still really high. Double check, the short float's still over 20%. I really love the buyback. So you got to buy back with the short float. Buybacks are basically, it's like cheating to make your stock go higher. The earnings are out of the way, so the earnings aren't in until April. And it's making a higher, or it's trying to make a higher low, but basically isn't making new lows. After this, it reported earnings, had some volatility post-earnings, and then this is the earnings low, and it's not making new lows, whereas other of these kind of random, not like DraftKings is the same thing, but a lot of these other kind of like crappy names are making new lows. Fubo's making new lows, PayPal, Roku. Yeah, these are all making new lows, and this isn't, so that's just kind of a little extra layer of probability. So I'm still deciding between whether I want to use this as my out, not have an out, or take some size and use this as an out on some of it. I'm still kind of deciding. And I just started it today just because it's a day 2 on weakness and the market's oversold. So it's just a good place to buy. If you want to be buying, these are the days where you want to be buying. So that's BBBY. The position's really, really small. It's not even worth me mentioning. but I have to. And then we'll see. I mean, this is like a nice weekly candle that this low made right here. So I'm going to watch it over, I'm going to see basically if this can try and make a higher low and get back above 14, or if the next day or two, if it drifts down to 13, I'll be watching it pretty closely to try and determine if I want to just slowly build in and trade it for cash flow, or if I want to try and actually take some versus this low here. So yeah, that's all I really have to talk about. I'm excited about this market weakness, and I'm hoping for a gap down. Tomorrow, SPY this whole 450 area, and again, 450 is the level. That doesn't mean that SPY can go to 450.01 and bounce, and that's what's going to happen tomorrow. It can flush 450 and go to 448, and then end up closing at 452 or something like that. But we'll see. Hopefully, we get some further weakness tomorrow. So yeah, that's all I really have to talk about. So if you guys have any questions, comments, definitely feel free to share now. You added CLF here. Oh wow, this thing got beaten up hard. I don't know if anything extra came out on this. That's you hate to see that. I really hate to see this lose this 22 level, and you can see what happened when it did. I don't know. I mean, 19's a level. 19's a pretty big level in this, actually, with a lot of history. 19's a level in CLF, but that doesn't look great, to be honest. Oh, AA earnings. Were they today? Not really doing too much. AA looks great still, above 58. Are you building into BB? So that's what I'm trying to figure out. I don't know yet if I'm gonna use this as an out or not. I'm gonna figure it out over the next day or two, depending on the action, as this drifts or does not drift lower into 13. And my target, this is a swing. Like my target's I mean, you have some pretty crazy targets in this, but I think my ultimate target would probably be 25, and then maybe just try and keep some for even I don't know, this thing can squeeze to 30, 40. We've seen it before. And now that they have this buyback and everything, which they've had before, but earnings are out of the way, like I said, our next earnings report isn't until April or something like that, so they should be buying back stock over the next few months or so. So yeah, I'll definitely keep you guys updated there. Like I said before, the market's in correction mode, the market's correcting. This is the time to stock for new swings, so that's what I'm trying to do. So I'm still looking around, definitely. What source puts the sentiment? Are you using EMA? I use SMA for the 200-day, always SMA. EMA puts a weighting on the most recent numbers in it. I don't know the exact calculation each one uses, but if you're using such a long time frame, I don't really see the use in weighting the most recent stuff, because it's really just about the slope. At the end of the day, it really is. As much as the 200-day can be great support and resistance and act like it sometimes, at the end of the day, it's really just what the slope is that is important. What source puts a sentiment index, and how do they measure it? There's a few different things that goes into it. So, put to call is a pretty big weight in it. Who asked that? T Trader. Put to call index. So I don't know. There's a few places to look at that type of stuff. But for instance, where I get the fear greed, which is CNN fear greed, they have a few charts that updates every day, including 5-day average put to call ratio. So that's for it, it's basically just when everyone's buying puts and no one's buying calls, it tends to be a bottom. And when everyone's buying calls and no one's buying puts, it tends to swing the other way, just kind of like an extreme. So put to call goes into it. A couple other things. What do you think about Ford and GM from here? Both breached the 200 SMA and closed near today's low. Well, Ford's 200 is down here. GM did, though. These are both names that I think in the new year, in the new market, you do want to be long. GM's been acting weaker than Ford. They're extended to the downside, or at least GM's extended to the downside, but it's weak. It's really, really weak. I would probably see how this acts at 55 to 54. That's kind of like your buy area, 55, 54. And then GM really should not be getting below 54. This should be developing into like a major uptrend, I would think. So this really shouldn't be getting below 54. So see how it acts, 55 to 54. And then Ford, really ugly day for Ford. They updated some financial numbers. They made a comment about they sold their stake in Rivian or something, which they made a gain from. You really hate to see all of this getting taken out in one day like this. You really hate to see that. And it's probably breaking the chart, and Ford probably is not going to rip right back up to 25. You really hate to see that. I don't know. Ford really should not, the same way, Ford should not get back below 21. Definitely not below 20. But Ford should not get back below 21. Maybe see, if it fills this gap, gets below 22, and then comes back above 22, watch there. But same thing, this should be forming, look at these, up move, consolidation, up move, consolidation, up move, consolidate, really long consolidation. Nice up move, nice consolidation. This should be giving this up move, you know what I mean? So if you see us back down below 21.20, that's no good. AA earnings, I didn't see those numbers, but the chart looks pretty good. Materials weak as a sector. Can you talk more about possibly not having an out? What's the thought process? Sure. Not necessarily an easy thing to talk about. The way I view it and trade with it is, I'm trying to think how to word it. If you're trading without an out, then your out is zero. There's no other way to put it. So you just need to size right and make sure that your risk reward is right. So I don't know, and there's different, you would probably need to ask me what scenario the trade is on. I would need to know more about your trade to give you a better answer. Because for example, if I were to not size up in BBBY but just kind of have a smaller core, I could not size up, have a small core position, and then trade around that core position for cash flow, and my out would be, I wouldn't have an out, and my out would be zero, but my reward, I'm thinking, is 25 to 30, which is at least a double. So the risk reward makes sense for that. You don't want to be swinging something with no out. That's a speculative swing. And stocks can double, stocks can triple, stocks can go 10x. So if you want to buy, swing a speculative cheap name if you think it can 10x, and if you're out zero, that's fine because you have good risk reward. That's different than like buying Apple intraday in extension and not having an out intraday just because you're buying intraday extension. And you're looking for a snapback because obviously like the sizing as well as the dollar amount really is what it comes to, because 1,000 shares of BBBY and 1,000 shares of Apple is completely different. So like that's a different type of trade where obviously you can't use zero as your out for Apple, because Apple's probably not going to zero and Apple's probably not getting cut in half, but it's easy to size up an Apple and have it start losing money if Apple has a down 5% day. So trading without an out with extension, like 5-minute extension, the 5-minute extension always corrects itself. So like, if you're buying this dip here, it corrects itself through this bounce, and then this out, like this low, that should be your out, and then you get stopped out on the rest because the the extension corrects itself. Same thing here. Like if you're buying this downside extension, you get your bounce, and then this low is your out, because then once that low breaks, that extension correction that you were looking for, it happened. So you have no reason to be buying anymore because that's the name of that trade. So I don't know if that helps at all, but again, it depends. It depends on that type of trade. Buying intraday extension on the market without an out is a different type of trade than, swinging a name that you think can, double or triple and your out is zero. Don't swing a name and try to make 10% on the name and have your out at zero, because the risk reward doesn't make any sense. It's the same thing as risking $1 to make 20 cents in a trade. So yeah, hope that helps a little bit. Let's see if there's any questions. No questions on YouTube. Josh providing some info on Ford. Yeah, Ford broke its 21 on the daily, which, yeah, I mean, you hate to see it. It's kind of like a kill, you call it like a kill bar. Just, a lot of consolidation, a lot of price action, people increasing size, building up, whatever, and then it all gets wiped out in one day. It's, it's tough. It's not, the chart's not broken yet per se, but it's a really ugly candle for Ford. Roblox, I bought the 10:45 a.m. candle after I saw the extended hammer. After I saw the extended hammer of the candle, started out green and then dropped instantly before I could get my stop in. So I put my stop in there and it bounced back, and I could have been even, but was already at 10:45. So are you talking about this hammer? I bought the 10:45 after I saw the extended hammer. So yeah, this is a hammer. Again, I really prefer hammers to close above their open. I highly, highly prefer it. Because arguably this is like a hangman bearish doji candle that is like one technician could argue this is a hammer, and another technician could argue that this is a bearish hangman doji, that the wick should be followed by a body of a candle eating up that wick, blah blah blah, what have you. At the end of the day, it's just more buyers and sellers. But so anyway, you bought after this hammer, and then it dropped. It started out green but dropped instantly before I could get my stop in. I mean, I don't know. You got to figure out a better method for yourself for putting stops in. You got to be able to put your stop in within seconds. If you're saying you bought like, I don't know where you necessarily bought in this candle, if it was the beginning of this candle, in the middle, or the end, time-wise. But my thoughts are just, you probably need to... You put your stop in at 75.99. What's this low? 76.10. Yeah, I mean, you probably just need to be able to have a better way to put your stops in. If you're not able to put your stop in quick enough, I mean, you probably shouldn't be taking this type of trade, really. I don't know. I don't know how you put your orders in, but something that I found that can be fast is if you use like a hotkey to enter, you can use a hotkey to enter, and then you can use your order entry box on your screen to put your stop in, and you can have your order entry box like loaded up with the commands for the stop already. So like you can put your bid in, and then you get filled, and then you just have to click and your stop's in. But definitely, I don't know. I don't really have any thoughts other than try and figure out a way to put your stop in faster. The trade itself, I don't hate the trade itself. You got multiple red bars into extension, volume picking up a little bit. I don't hate the trade itself. Yeah, I like the trade itself. Yeah. Do I recommend energy names on a gap down? It's hard to say. I've been thinking about that myself. It's hard to say. Because this is like a day one where you would expect USO to be down tomorrow based on today's daily candle. And I know XLE, this is what I was saying before, XLE's had 2 days of sideways correction, so you could almost start to be wanting to be long XLE, but oil looks like it's going to go down again tomorrow. However, when things go parabolic, the way oil is going right now, you typically only have like one down day. So, I don't know. If the market gaps down tomorrow, I'm looking at like tech. Not really looking at energy. Not saying energy can't go tomorrow, but the play on a gap down tomorrow is further downside extension, and that will not be the case for energy. On the flip side, obviously, you're buying, that's relative strength. Energy is relatively strong. So on the flip side, you could probably look at XLE versus like 63. And now this ADMA is caught up here. So you could look at XLE versus 63 and gap down. But I wouldn't necessarily, I guess my point is I wouldn't expect energy to go tomorrow. Not saying it's going to break down. I'm just saying I'm not necessarily, I wouldn't expect USO to be above 62 tomorrow based on today's candle. But you never know. This stuff's crazy. Traded by crazy people. All right. Looks like I got through all the questions. Oh, someone on YouTube asking me about silver and gold. Silver, I saw was up today. You asked me about SLV and gold. I don't know if you're asking about gold or, I know you typed GOLD. So silver, big day today, 2150. I mean, it looks like it's trying to clear up for sure. I would definitely want to see SLV hold. Probably at least hold 22 going forward. It's a little bit extended now. I mean, metals are definitely not easy to trade, but overall this chart looks pretty bullish. And if SLV can clear above 23, then you're looking really, really solid. So SLV looks pretty good. And if you can get above 23, it looks really, really, really good. And you asked me about GOLD, which had a really big day today. GOLD, if it can stay above 20, looks great. And what about gold itself? Gold itself, similar but different to silver. You know, looks like it's trying to break up. It's actually confirming a higher high today. The only thing I ever really bring up when I mention gold is it's in a 10-year cup and handle with this big cup and then this big handle going way back to, what does this go back? 2011. Might look a little bit better on a weekly chart. Yeah. So on a really, really, really big picture, I mean, gold looks pretty good and pretty bullish. It's just not easy to trade on a day-to-day picture. But on a daily chart, you definitely don't want to see GLD below 170. Cool. All right, I think I got through everything. So thanks, guys. Thanks, Derrick, for letting me do the meeting. And let's hope for a gap down tomorrow. Let's hope for it. We'll see. We'll see. They don't make things easy, but I think we can hope for a gap down. Good night. We'll see you tomorrow.